If we want to achieve anything worthwhile in this life, we need to set goals and then track our performance. Last year, I set some goals for my portfolio for 2022. I wanted to go through those, tell you where I achieved those goals, where I fell short, and also talk about my goals for 2023. If you're interested in that, stay tuned. Hey guys, Kevin Burgess back again with another video. This is actually a bonus video. This is the beginning of the year, so I wanted to share with you what my goals are for 2023, but it would not be appropriate to do that until we actually looked at 2022 to see how those goals performed. So if you're new to this channel, what we talk about here is dividend investing. We talk about stocks that are solid, that pay reliable dividends, and they grow those dividends consistently year after year. If that's something you're interested in, please consider subscribing to the channel. I'd love to have you along for the journey. And as you know, I'm not an investing professional, so anything that I talk about here in terms of investing is strictly my perspective. So we had a good year in 2022, but we want to compare that to the goals that we had set out. And I will let you know ahead of time that we achieved some goals and we didn't achieve some goals. So let's go ahead and run through those. So on the screen in front of you, you'll see the portfolio goals for 2022. You can see it's got the old logo on it. And so you can also see that I called it Structure Investments to Match My Lifestyle. What I meant by that was I had retired in 2021, and 2022 was a year of transitioning portfolios to match the future lifestyle that I wanted to carry out. So here are the goals that I've set forth. We're going to go through them one at a time and see how we did. So let's take the first one. With the first one, we said we want to achieve at least a 4% yield in the yield portfolio. Now, I renamed the yield portfolio to be the income portfolio. So achieve at least 4% yield in the income portfolio. Let's see how we did there. You can see that in the income portfolio, we achieved a 5.25% yield, which means that we get a gold star for goal number one. So we got at least 4% yield in the income portfolio. We achieved 5.25%. Fantastic. Let's move on to the next one. Invest at least $7,000 per month in the income portfolio. Let's see how we did there. You can see here, this is the December 30th portfolio update. You can see that we put in about $132,000, almost $130,000 of that was in the dividend income account. If our goal was to put at least $7,000 a month in there, 7 times 12 is $84,000. I think we achieved that goal in spades. So that's good. So we're going to give ourselves another gold star there. And then now the third goal, which is average $1,000 per month in dividends in the income portfolio. Let's see how we did on that. And this is $16,540. $1,000 per month would be $12,000. So we blew this away. So a bit of a caveat to that, I sold at the end of the year on December 30th, quite a few shares from my dividend income account. If I were to look at that on December 30th at the end of the day, I would not have achieved that goal, but I have a lot of cash sitting on the side. So I'm going to go ahead and count that as a win. So we're going to move that then to a gold star. We have 3 gold stars so far. The next one is average $1.3 thousand, so $1,300 per month in dividends in the growth portfolio. So $1,300 per month is about $15,400 per year. When I look at my Simply Safe dividends, I ended up with $14,800 per year. So that did not meet our goal. And so we get a red X on that. But you know, we got pretty close, but close only counts in horseshoes and hand grenades. So we did not achieve that one. The 5th goal for 2022 was to set up a charitable giving investment account. If you're not familiar with those, it's a way that you can actually donate money into a charitable account, and then you can determine then where those charitable funds go at a later date. It allows you to manage your donations so that you can manage your tax situation. So I wanted to set one of those up in 2022. And as you can see, we have the Burgess Family Giving Fund. I set this up through Fidelity Charitable. So now we have this account and are able to donate through it, which is really cool. So we're going to give ourselves a gold star. Now, the next one is to contribute at least 10,000 in appreciated stocks to the charitable gift account. This did not happen, so we're going to make that a red X. And the reason it didn't happen is because stocks did not perform very well in 2022, so we did not contribute $10,000 in appreciated stocks to the charitable giving account. The last goal, at least for the portfolio, was to develop a due diligence analysis template. Now, I've gone over this template in another video. I will attach it at the end so that you can watch that if you want. But here's a bit of what that looks like. It's a 5-factor test. And I'll give you just a little bit of background on this. I think it'll be helpful for most people. So the first factor is the financial assessment. And what we want to know here is how is the business doing? How is the business performing? So it's important to know, and if you just look at earnings per share, for instance, there could be stock buybacks in that. There could be, any kind of accounting shenanigans. But if you want to know just how the business is doing, the financial assessment is the way to know that. The second factor is the capital allocation assessment. So this measures how well the management team manages its capital allocation. So it's free cash flow that comes off of the business. How does it invest that? Does it invest it back in the business? Does it pay dividends? Does it buy back shares? How is it using that excess capital? We want to understand that because it's important to see how the management team is making decisions. We want the business to be healthy, but we also want them to consider giving dividends and share buybacks. Factor number 3 is valuation. What is the company worth? The next two are related really to management and its strategy. And what's really important to understand is that many times we're buying stocks based on their past performance. And when we're looking at just the past performance, we're missing out on really what we're buying, which is future performance. So it's a really important point to make sure that we understand the strategy and management capability moving forward. So if I look at their strategy and I don't understand their strategy, it's either that they don't have a clear strategy or it's not in my sphere of competence. Maybe I don't understand the strategy. So in either of those cases, I should back away from that investment. It might be the perfect investment, but if I don't understand it, I need to stay away from it. The last piece is understanding the company's management. You're looking for what kind of long-term growth they have, whether they're making good decisions or not, whether their acquisitions or divestitures are in line with their strategy. So we're looking for a lot of different intangibles there. If it's a new management team, that kind of throws a wrench in everything because you don't know them very well. So you just have to do your best there. But again, you're looking to understand where the company might head in the future. So let's consider this a 5-factor test. And anybody that gets 5 stars, like Texas Instruments, is a 5-star company in my book. Let me give you an example of a company that did not meet the 5-star standard. And that is our friends at Intel. And I know a lot of my buddies love Intel, and that's great. But from my perspective, they're only a 3-star company. I think their financials look great. I think their valuation is really cheap. I think their company strategy makes sense. But where they fall down, in my opinion, is their capital allocation assessment is really borderline at this point. They're keeping their dividend, but yet they're needing to spend a lot of money to go after the strategy that they've put forth. So not really sure they have a great capital allocation process. And then also their company management assessment, they've had a struggle keeping up with their technology trends. So I haven't seen a great performance from the management team. So I've given them a 3-star, therefore I do not invest in them. I mean, obviously, you got to make your own decisions there, but with my 5-factor model, the Intel is only 3-star. So we're going to give ourselves a gold star on the develop a due diligence analysis template. And now I want to move on to our 2023 goals. Without further ado, here they are. Our first goal in 2023 is to contribute at least $2,000 per month to the dividend income account. That's going to be $24,000 per year. And we'll see how that turns out. It's a great goal to have, and that would mean that I'm continuing to grow my dividend income account. The second thing is I want to transition at least 10% of the dividend income portfolio to higher dividend growth. And why that's important is because I believe that as the economy, over the next year begins to position itself to recover, I think higher dividend growth stocks will perform better than higher dividend income stocks. So I want to transition some of that income portfolio into higher growth. Thirdly, I want to convert the tax loss harvested BDCs, which is actually, there's only one, and it's called Main Street Capital. I think I'm going to move that into my IRA portfolio for tax purposes. Fourthly, I want to determine core investments in the dividend income account. So let's talk about that for a second. I've heard a lot of YouTubers talk about core investments. I hear one guy talk about his core investments, his core investments, his core plus investment, non-core investments, but nobody really gives a definition on what that is. So in 2023, we're going to identify and define what core investments means, and we're going to focus our attention on those core investments and treat them differently than our non-core investments. So there's more to come on that, but I wanted to kind of explain what I meant by that. So moving on, whatever we identify as core, we're going to set those to reinvest the dividends automatically, because if they're core, we're going to be buying those regardless of what the market looks like. Then I've got 4 goals around the portfolio itself. One is to achieve at least $18,000 per year in annualized dividends for the dividend income account. That's going to be a nice to have. That's going to be about $1,500 per month in that account. Then I want to achieve $16,000 per year in the annualized dividends for the dividend growth account. Next, I'd like to achieve a 5-year dividend CAGR of 5% or more in the dividend income account. And then lastly, achieve a 5-year dividend CAGR of at least 10% in the dividend growth account. So there's one thing I don't set a goal for, and that is portfolio value. Portfolio value is highly dependent on the market, and that is one thing that I can't control, is the market. So I can control how much money I put in, I can control the investments that I select, but I can't determine and I can't control what the market does. So I don't set a goal for that for my portfolio. So hopefully that's been helpful. If you like videos like this, if you wouldn't mind hitting that thumbs up button, I would really appreciate it. And again, if you haven't subscribed, consider subscribing to the channel. If you want to subscribe, you can click this button over here. If you want to see the video that talks about my due diligence process for investigating stocks, click on this button over here. And with that, I will see you on the next video.